Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it. Hey everybody, Nick Petruzzello. Today is Wednesday the 3rd, and this is the BAM Trading Markets and Crypto Zoom call. And we got a couple guys here. Sorry, I got a little notification there. Apologies. We're going to talk about trading, markets, and crypto. Imagine that. I got a couple guys in here who are with me over at Algo Factory. They're also BAM members, and we might go through some kind of advanced concepts a little bit. I don't want to, ruin it for the newer traders. So before we get into the JPY trade and all that stuff, guys, why don't we zoom out just a little bit and answer any basic questions about what we might have going on in the market. Who was in here first, Larry or Nick?
Nick
I was, but Larry can go first if he wants. He can ask his questions.
Okay. Well, again, we're going to kind of go more basic zoom out questions because I know what's will happen is, us us trader nerds, like we'll start talking trader talk and people will shut off. So, I know one of the things people might want to know about is the Japanese yen carry trade, and we could get into that, but let's see if you guys have some general questions first before we get too far into anything like that's too crazy. Larry?
Mine would be I'm getting to the point that I can understand bias in the market on whether a reversal is coming or whether the trend's going to continue. How do I now get to or what's the best way to get to the next level to understand the strength that that's going to have? Is there anything that can help me figure that out?
Oh, well, yeah, that you're when a trend is going in a direction, right? It's going to be, let's just say that you're not looking at gold or something where the market's at all-time highs and there's not really any historical data to tell us where it might stop, right? Gold's at like $4,200 and it's really never been that high in the last couple of weeks it was higher than that, but if you look back for the existence of the dollar, gold's never been this high. So if I look at the chart right now and I zoom out, if you look back through time, there's really not a way to have any idea like where gold's going to stop going up. Because if you look through history, like if this were, 2013 or something, you could say, hey, at one point gold was at $2,000 and now it's at $1,050 or whatever. So the trend's going up now, right? Like let's just say you're having this conversation right here. Well, I'll use the replay function just so we can have this conversation, right? So now we're in replay mode. So basically what this is like going back through time. So 2015, so I'm going to move this back a tad. Why does it do? That's weird. Give me a second. Data point unavailable. Okay. All right. Well, okay. Sorry. Pretend the end of the screen is like where we are now in time. And Larry's like, hey, the trend's really strong right now. The trend is going up right here. Follow this arrow. The trend's going up, but where's it going to stop? How do I know that the price is going to stop going up and I want to sell my gold and get the most I can for it? This is kind of what you're asking, right, Larry?
On a shorter time frame, yeah.
Yeah, but we're just, this is the same question. It's just on a higher time frame. So you can look back here and you can say, oh, well, gold was once at $2,000. So as price gets closer to $2,000, there are a lot of people who bought gold up here back in 2011 when they were panicking because of the economy and they thought everything was going to end. And so they were buying gold. They didn't care what price it was. And it went up to $2,000, right? And so a lot of those people who bought gold at that price, they're going to want to sell their gold because it's like, oh, finally it's back up to where I bought it. They'll want to sell some of it because they're going to think, oh, well, what if it, goes back down, right? Oh, I'm at break even. So a guy like Larry is going to want to like say, oh, hey, the trend is headed up. And sure enough, look, it went up just above 2000 and 2100 and it went back down. So anybody who sold at that level was able to make some profit and even buy cheaper gold at about 1700 after the fact. So the simple way to know if the trend is going to change is whether or not there's structure. Larry, I know that you know that, but of course, we're talking to people who might be watching this who don't know that, right? So now we're in a different position where if you undo the replay function, which I will do right now, give me 1 second, you'll see that price just kept on going up and up and up and up and up. And it went up to like, instead of dropping when it hit $2,000 in 2020, it just kept going up. And now it's at, for 4,200. Well, how do you know price is going to go all the way up there? Well, in this case, you kind of don't. I mean, we knew over at Algo Factory because um, I have my own experience. I'm pretty good at this stuff. I was calling at that time when gold was in that range. Anybody who's been in Algo Factory going back to 2023 will know that I called gold going up to 3 and 4,000. But V the Gorilla also knew it because he literally is in like the gold business where he makes most of his money is selling gold to people. So basically, the way that you know that is going to be, in this case, a fundamental question. So the market bias here was based on macroeconomic factors, geopolitical factors, right? And that's how investors play the game. But Larry is not talking or thinking like an investor, which is fine because we're not investors in this conversation. We're traders in this conversation, right? We're not looking to buy something and hold it for 10 years. What we're looking for is to take advantage of small fluctuations in price over a period of hours, maybe, or even minutes if you're the kind of guy that can do that, which those guys are such as myself are few and far between. Most of them lose all their money. So I'm going to go to the USD JPY and I'm going to talk about a trade that I'm in right now. And I just see that alert right there that just hit on the screen there. I don't know if you can see this. 50% plus stop to break even. All right. So I have an algorithmic this. Oh my God, dude. Is this not perfect, guys? Is this not perfect that this alert just came up? Can you see it on the screen
Yeah.
Yeah, I
on
can
the
see it.
bottom
Yeah.
left? So it says 50% plus stop to break even. That's an algorithmic exit that I set for myself like hours ago when I first took this trade. And what that is, it's I use the MACD and, I'm not going to tell you all my secrets and stuff, but long story short, this is an alert. And believe it or not, it's for a prior trade, not for this trade. But when those conditions are met, I am to take 50% of my profit and move stop to break even, right? Now, break even is different than entry. We'll talk about that a little bit. But since that algo is not for this trade, I'm going to ignore it. But what I would do is I would move my stop loss. I would take half the profit that's in the trade right now. Take a look up at the conditions here. I'm going to just make sure I do want to stay in this trade real quick. Give me a second. Yeah, I think I can stay in this for now. I will stay in this trade for now, but I'm going to add an alert. Oh, wow. That happened quick. Um,
Now it's shifting back bearish,
well,
correct?
say again.
It's shifting back to bearish.
No. Um,
No.
no,
Okay.
it's not. I mean, it will. Okay, look, on a higher time frame, the Bears are starting to have a little influence, but
Okay.
that's always on the balance, right? The Bears come in, the Bears come out on the low time frame. Now, in the high time frame, the Bears are in control of this trade, but I'm doing a counter trend trade. So I'm actually trading against the high time frame bias in favor of a low time frame bias. If you look high time frame, you can see, and I shared this with Algo Factory and Nick and Larry have both seen it. I think it was last night that price would do this. And did this, it did, right? I said price is going to do one of these two things. It's either going to grab a little liquidity and head down, or it's just going to head down. And it actually kind of did in between both, really. It peaked up. It's hard to see on this screen, perhaps, but it actually grabbed some liquidity right there, and then it headed down. So anybody who, saw that, they now are able to have a bearish bias, right? Because that's my bearish bias. My bias on this is bearish. You're kind of talking about bias right now. So because I have a bearish bias
Yeah.
on this trade, then of course I'm going to go short. And that's going back to last night, Tuesday night. Actually, really, Tuesday morning. I talked about this Tuesday morning. It was a day and a half ago. And yeah, price went down almost completely to where have the arrows ending, right? And I shared the setup, and that's what I do at Algo Factory, basically. And in this case, kind of giving away free money. And we had some good trades on the JPY last week, and we had a little bit of a win or two on Bitcoin. Like, look, Algo Factory is not a trading service. Like, the idea is not for you to go and like follow my trades and make money. I do share my trades and not all of them. I share a couple a week for educational purposes, right? So this isn't what Algo Factory is. We teach you to like learn how to do this, not just to like be a parrot and do my trades. But long story short, I did show this last night, went down, it did. Now, this afternoon, I personally like my bias is still bearish. I think that it will go further, but it may encounter trouble right here. And Larry's question really is important here. So the question is, if you have a bearish bias, how do you know that trend is going to continue? That's the question. And so looking at this chart, if I were to kind of draw this out, my bias is bearish, price is headed down. Now, how do I know that the price is going to continue down at this point? Is it going to continue down or is it going to go up? Now, it won't happen in a straight line like I just drew, right? It's going to, maybe go like this. Maybe it'll go like this and then down, right? It's not, but just for educational purposes, is it going to go down or up? If I'm short on this trade, if I'm betting on the price going down, do I want to take out my profit now or do I want to stay in the trade and get more money because it's going down, right? Because we're betting on the price going down. It's kind of a hard concept for new traders to understand. Um, and the question is, and the answer is going to be, for me, it's always going to be around structure. And so I don't, my algos are going to tell me a lot. I have two ways of getting out of a trade. One you just saw was the algorithmic exit, and it's just based on the indicators saying certain things. And if that's the case, I have rules. So when that particular thing happens on that time frame with those indicators, which the indicators are at the bottom of the screen, right? So I have an alarm set for when one of these does one thing, this particular line does that, right? The little squiggly line does this, whatever, right? Whatever the rule is. My rule is not to think, oh, is this going to go? Is this not going to go? My rule is take half my profit off and move the stop to break even. That's the rule. I'm not going to think about, oh, is it going to go further? Is it not going to go further? It's take the thing off and move the stop loss. And that way I'm not like thinking, oh, is this going to go? Is this not going to go? Now, the reason I can do that is because I've determined based on my own algorithm that when these things happen with these indicators, price might turn around, right? I've done the math. I know that when I see that thing happen in the middle of a trade, like 80% of the time, the best thing for me to do is to take off half my profit and then move my stop to break even, or even move it to entry, depending on, what algo I'm doing. And the reason I know that is because I have gone back through time and I have tested like, hey, if I see these things happen with these indicators, what's the best thing for me to do? And I have a couple of different ideas. I could just move stop to entry and let it run. I could move stop to break even and let it run. Those are two different things. I could take off all the profit, right? So far, the best thing when I'm trading the USD JPY on the 30-minute chart or even the 5-minute chart with this algo, the best thing I could do is take half the profit and then move the stop to entry. It's entry is better than break even. There's a distinction there. So far, entry's better. But long story short, that seems to get me the most profit. I can take half my profit off, and then I have a chance of the profit running to the rest of the target, right? So how do I know this? Is because I've back tested it. I've gone, and Larry, I know you, both of you, Nick and Larry, you all know about back testing. You know how that works. There's no question about what that is and how it works. You just have to go back through time And you have to look at all the times when your trade starts to reverse against you. And then you have to determine whether or not you should have stayed in that trade. And then you play that out. And then when the trade goes against you, you need to take a look at whatever tools you're using and use those tools to be like, okay, this tool is predicting that there's a pretty good chance the trade's going to go against me. And that's always going to also be incorporated with market structure, right? So, for example, when I said, hey, it turned around, gold flipped and it fell back down after 2000, I've got a pretty good idea that it's going to do that again. Like that's using structure as part of the equation. And you can always add that into your algos. It might not be something that you can code for and auto trade very easily. There are ways to do that as well. I don't generally bother with that, but that's how you know. I mean, uh, to really put it simply, if you have price, like to answer your question, if I was just to like send you in to fight the dragon with one weapon, right? To answer your question, like very simply without getting technical, how do I know the trend is going to stop and maybe turn around? Let's just say that this is the price line and you're headed towards, okay, let me actually make this a little simpler for people to understand. Let's say that in the past, price did this and now it's here and you have bought whatever this is and you're betting on the price going long. You're betting on the price going up, you're long. So you know that way up here, price turned around, right? And your math says that price wants to go up. And so you're in this trade, you're in profit. Now you see that structure. Well, that would be thing number one, right? Thing number one is you're coming up against structure. And I know you know that, Larry, just for the new people. So the second thing to know, though, is that you can use um, like price action to see the volatility, or you can use indicators to see the volatility, which ADX is pretty good for that. But ADX is a very slow moving indicator. Like ADX takes forever to actually reflect a change in volatility. Um, Still looking at that JPY trade. It's bugging the shit out of me. Uh, so what will happen with the ADX, and I might have to like go to a different chart for this. Well, first, we'll talk about it without even looking at that stuff. What you're going to notice is that the candles will get shorter and smaller. So instead of this big strong move, you'll get up to structure and price will like bump its head. It might still kind of want to go up, but it gets weaker and it gets more choppy and like a lot less goes on, right? That's what you'll see. I'll show you all some real examples of that. That right there could mean that it's gathering up energy to go up, or it could mean that it's just going to reject. Could be both. So that's like half the answer. When you see things slowing down like this, like, oh, now, I'm at structure, price is slowing down. Those are your like basic bitch clues of like, okay, price might flip around and head down. That's what that is right there. Okay, so if I were to actually go to a new chart here, I don't know if this is going to change. So give me a second. Yeah, this is the good
Well,
one.
can I ask a specific question on the JPY?
Yeah, sure.
Okay, so on a 30-minute time frame,
Hmm.
okay, I've got a trend following when it switched, and luckily I was able, my algos got me in before it started heading down, right? But now, if you go from the big move that was right around 7 o'clock this morning, right?
Yeah, that was due to the news.
Yeah, now you got a higher high that came, but that could just be a retracement, and now it looks like it's heading down, right? If
Actually,
that
yeah.
low,
So you're
if
talking
that,
about, well, am I on the 30 minute? Yeah, okay. So let me put an arrow so I can see. Do you mean like this move right here?
hold on, I'm switching over to yours. No, the one that it's on right now,
Oh, the
the current.
the current move. I'm getting out of this trade. I'll go
But
to
so,
start a ping.
so
Give me one second.
I have a short on that. But my question is that if that lower low, if it doesn't create a new lower low, then that's a reverse of the trend, correct?
Give me a second.
Or would that be considered chop? Because you're still in the range.
Sorry, I had to get out of that JPY trade. Um, Give me a second. All right, so you're talking about on the 30-minute chart, this
Yeah.
move like up right here, going against the trend.
So if you go back to the day and a half where you're talking about where your drawing starts, right?
Yeah,
It hit that price point and then it started coming down. Okay.
gotcha.
I got into the trade there, but
You
then if you
shorted right
use
here.
correct, I shorted right there.
Great.
I'm still in it right now, but my question is that where I'm confused is this new structure that's being created, or is that within the chop of the last lowest high, lowest low?
Oh, so what you're talking about is like classic trend following, trend identification. So I'll go to some earlier stuff to look at. That way
Okay.
people can see it without all the gobbledygook on the screen. So a trend is going to be identified either like an uptrend or a downtrend, right? You're seeing them both on the screen. So the uptrend is going to, let me get rid of this ribbon real quick so people can see what I'm talking about. And so with an uptrend, price is going to make higher highs and higher lows. So if I were to zoom in on this, price makes a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Those that all means you're in an uptrend, right? But at some point that's going to
Okay.
flip around. You're going to end up in a downtrend,
Okay,
right?
so now where you're at right there, that last leg that you just mapped out
Yeah.
with the higher high and the higher low,
Hmm.
right? So now, in order for structure to be created, you have to have a break of structure. Otherwise, you're still considered just within range of that, correct? So if you were to draw a horizontal line out of the higher high and the higher low, anything that occurs within that is just chop within range, correct?
Yeah, it's just what it is. It's part of the pullback. So you're anything that happens after this until that lower line is broken is potentially just a pullback within the trend.
Okay.
You
That
can match the
that's
higher that higher low really would be actually here. So that higher low can happen again and price can continue up, and it almost did.
can you go to the right of a higher high? I always thought that you had to go to the left.
We might be talking about two different things, but not two different things, but two different. So higher high, higher low, higher high, higher low. This is not a higher high, right? So this is just matching that high. It never broke.
Correct.
So you're
Lower.
so this is your higher low right here, right? So there has not been another higher low
Okay.
at this point. So yeah, it would be right here. So as this goes in between this higher high and higher low and does not go past it, you're not you're still in the uptrend technically,
Okay.
right?
Yeah.
Obviously you see that it becomes a downtrend, but once this lower low gets broken, you're now in a bearish rotation. Is that look, don't get too hung up on the um nomenclature. It's like the words that I use are just words that I use. Like so different.
No, you answered my question.
Okay.
Because like one of the exit strategies that I use is break a structure, and you answer that. That it did not break structure until it crossed the lower low or
Yeah,
the higher
well,
low.
but this break of structure could actually just be like it could continue it from there. But yeah, once you break structure, like if you really want to just keep it really simple and like get out of the trend when the trend is possibly over, then you could set your stop loss right below the structure and then you're out.
Yeah, yeah.
Like that's, that's a very safe way to do it. Just understand that this actually could be just a complex pullback for this one, and it might continue up. So that's possible. But given the size of these higher highs, higher lows, and that massive move, that's a very obvious like exit. But at the time it happens, you don't know that. At the time that this breakout happens, you don't know that that's going to happen like that, right? So that's the tricky part. It's easy to talk about it looking back, but if you want to keep it simple, yeah, you have your stop loss below the most recent higher low. That's the Bill Williams method.
Well, and the reason why I do that is because then, like you said, you don't know if it's just a retracement to then further grab another leg up. But nothing that I'm looking at that even got me into the trade, everything's reversed. But then my confirmation that confirms that it's a reversal to what got me into the trade is that when it breaks structure, then I get out. If
Yeah,
the
you
algorithm reset and say go long, then I would go long, but I had to stay consistent to the original foundation of what the trade was.
that's good. So you have an algorithmic indication that the trend is now over, and then you have a break of structure. So that's pretty. That's textbook. That's how you should be
Yeah,
doing it.
and that was my question: is that if is it correct to wait until break of structure if my algorithms are telling me to get out?
Well, the question can only be answered by back testing because your algorithms can flip. So now there's a couple ways to look at that. It might be that your algorithm might use a higher time frame filter to help you understand that question, right? You could look at a higher time frame bias. So if your algorithm's bullish on like the 4 hour chart and the daily is also bullish, you might find it staying in that trade is the better way to go and just waiting for structure to be broken, right? Because the algo could flip back up. Or it might be that under any circumstance, if your algorithm starts to be neutral after a big move up and the algorithm goes away, your reason for being in the trade is gone. And then yeah, it might just be best that structure is broken and you're out. It might also mean that if your algorithm goes neutral, um, or flips even, it might be getting you more profit to actually get out when that happens rather than, like waiting for the structure to be broken. But it might also be that the break of structure happens before your algo flips, and that will actually make you more money. And the only way to know if it's best to do that is to backtest for that exit
Okay.
because some algos are going to be better than others. Like the general rule is the stronger your algorithm is, the slower it's going to flip. So you'll get less trades, they'll be more reliable, and if you're going to rely on a strong algo for an exit, like when I say strong, I mean your rules are going to mean that you'll have a higher win rate, right? The move is definitely established by the time you get in. You're going to get in a little bit late and you're not going to get as many trades and you're not going to get as much of the move, but the moves you get will be good. That tends to be the balance in trading. The balance is usually that the better your win rate, the less trades you get. So there's always this attempt to meet the balance of having a decent win rate, but also having a decent amount of trades. And that's kind of that's the holy grail of trading with algos is you want to have a good win rate and you want to have a good frequency of trades. And then the third part of that is going to be your risk to reward ratio. Like if you can max out your risk to reward ratio, the amount of trades that you get in a given amount of time and your win rate, if you can max all those out, that's the win rate. And those things tend to be kind of inversely proportionate, where if you have a lot of trades, then the chances are you won't have as good of a risk to reward or win rate. But then it also could be that you have a lot of trades with a good risk to reward, but your win rate sucks. So that it's actually not, it's three different factors that all detract from each other. It's actually quite the puzzle. But yeah, I mean, it's if you want to keep it simple, just put a break of structure. If you want to know what's going to pay you better, you're gonna have to go back through time and you're gonna have to figure out, okay, should I get out when the algo flips or should I get out with a break of structure when the algo goes neutral, right?
Yeah, fair. I'll have to go back because I am definitely seeing a difference.
Yeah, and the only way to know is to quantify it. And then that's going to give you a clue. The back test is going to give you like 75% of what's probably going to happen. And then you
Yeah.
can take that and forward test it and then you'll know.
Yeah, because it saved me on the Euro USD trade today because my algorithm flipped, but I stayed in it because it didn't break structure and now it's reversed.
Well, there you go. Structures is powerful, right? And structures live. Structure doesn't lag. Indicators lag. Algos lag. Structure doesn't lag. Structure's there. It will always be there, and it happened before. So as price approaches structure, structure's already there. So you don't have that lag issue. That's why a lot of your best traders rely on structure, especially your range traders. They don't even really use algos. Range traders just strictly rely on structure. We talked about that before.
Hmm.
Nick, you have any questions?
Uh, what do you think about the U.S. CAD and what other one was I thinking about? U.S. Swiss.
Uh, do you have like time frame specific questions or
What do you think of like the 4 hour zone or the 3 hour for those currency pairs?
sure. Let's do this. I need to really remove all my crap from that.
Yeah, it's crazy how you have so many screens going, bro. It's nuts.
Oh, you can
I get used to it. Yeah,
yeah, oh yeah, yeah, yeah.
yeah.
On the 3 or 4 hour, okay, so CAD got bearish. So it has actually like the dollar against Canadian has gotten rather bearish in the last week. And I think it's gonna this is on the daily chart. I think what we're gonna see is I think price will stabilize a little bit. It might this is on the daily. I know you asked for the 4 hour, but this helps. So price may stabilize in this range, or it might drop into this old range. And what a range is for, new people watching, is price just bouncing back and forth in like the same area, right? So the high time frame is getting like rather bearish. So if I had to just like, hey, what do you think is going to happen? On the 3 hour, I would say most likely price is going to grind down. I mean, you might see a little bounce here and there, but you're probably just going to get grind down, grind down, and then a bounce, and then a move down harder. Now, it might not be on this time frame that I just drew, right? But that's the general like expectation, just based on what I'm seeing. And then as price heads down, you'll get probably a precipitous move down to this $1.37 area, kind of a grind, but strong. And then here you might actually get a bounce. And then what might happen, and I'm projecting out to like next year here, so it's just a whole don't take this for gospel, but this is a general idea what I think is going to happen, right? And then it'll probably bounce around in this until it doesn't. The dollar ultimately is bullish, but I think we're not going to see the dollar really come into its own bullishness until like quarter two. There's the concern about the Japanese yen carry trade. We'll get into that, but you wanted to know about the Swissy. Swissy is the opposite essentially of the dollar. It's I mean, excuse me. Swissy is going to be really a lot like the opposite of the euro versus the dollar, right? So
Okay.
ultimately, the USD CHF is showing bullishness, but this one here is actually pretty decent for the range. If you're going to play the range right now on the daily, so I think let's see, what's this, the weekly? Okay, so weekly. Let me bust out the monthly so I can see it. Uh, um, I think ultimately, like, yeah, I think you're going to see a few months of sideways action on the monthly. You won't notice that because that's in such a high time frame, right? So you're probably going to get a series of ranges on the daily, like we talked about, where price is going to kind of pull this, right?
Stay within that whole range. Okay, and just kind of stay sideways, pretty much.
Well, it's going to be sideways, but then you're going to have like times when
It'll go a
uh
little bit below or up above it, and then come
above or
back in.
below. Yeah, like in a sense of like it'll probably it'll be ranges within ranges. So like
Oh, okay.
it's gonna go see how you have like this high time frame range right here, going back to like
Yeah.
the last couple of years, and then it kind of
Yeah.
grinds down, kind of like I told you about with the Canadian dollar. It's like it's gonna be like a bigger version, I think, of what happened with Canadian dollar, where over the next few months it's gonna play around in this range. It might come up into like a range like this, and then down, and then eventually, though, I think you're gonna see it head up like this, probably around that time or sooner. This whole thing you could compress that because this is like June. um, right? So that's the eventuality. For now, though,
Yep.
if you're going to be trading on like the 3 hour, I'd actually be watching the daily flips on that. So if I were trading the 3 hour, then I would look for this is what I would do on or the 4 hour, same kind of thing. What I would do with this is I wouldn't enter this trade right now. I would not short this. It might grind down and you might feel like you missed a trade, but just based on the way I trade, I would
Yep.
let this, it might not grind down, it might grind down, but it's going to pop up. And I'd sell that short. Whenever it pops up, I'd sell that top and I look to get out before the bottom here where it continue like it always bounces. And then when it gets down to this area, there's a really good chance it's going to be bottoming out in the daily on the metric that we use at Algo Factory. I'm not going to name it. And then you're probably going to see a nice long right there, and it's probably just going to go like this, right? So if you're in the 3 hour, then what you're going to do, like with these moves, is what's really going to happen. Let me just do this to make it nice and neat. So I'll zoom in on the 3 hour since we're on the 3 hour. All right. So what'll happen
Yep.
here is that this will come up and it'll bounce back down. And you get these pullbacks all the way up. So as long as I'm like on the lower half of this area, I'd be comfortable buying like these pullbacks. Because that's the way what price is really going to do, right? It's going to have these short, quick pullbacks. And as long as price is actually bullish, as long as it is bullish in the first place, I'd be looking to buy those pullbacks. So effectively, like, see how it bounced off of shit. See how it bounced off this low and then
Yeah,
it
I
came and
see
pulled
that.
back right there and then it pulled
Yeah.
back. I wouldn't get this pullback up here, but like this little pullback right here, you see that red candle and it like continued up. I'd be buying and trading those pullbacks, like this pullback, that pullback, right? So I just be, always look at the wider picture, understand the market structure, and then when you see, for example, a perfect example is going to be right here on this move down, right? Clear downtrend, but like right here, but then you get this pullback right here. You get the pullback right there. You get this pullback right here. Like those are all little trades you can take. And you might not be able to get all of them. Your algo might not call it out, but at least one or two or three or four of those on the 3 hour. That's from Wednesday the 5th all the way to Thursday the 13th. So that's about a week. A little longer than that because the weekend's in there's just almost like 2 weeks. So that's one, two, three, four viable trades on the 3 hour, probably, twice that on the 30-minute chart. Um, those are good trades, but a lot of people, what'll happen is, and the mistake they make is price is headed down and they want to panic into the trade because they think it's going to continue down and it may continue down, but the problem is it's going to come up before it does. So don't be afraid to like wait for those pullbacks. They want to panic into the trade. It's like here, they want to panic long, like, oh, price just went up. It's price is headed up. I got to get in the trade. And they get in right here. And then like let me zoom in. It's hard to see. They get in right here and then the price goes down on them right there. Right. And they're like, oh, now I'm in a loss. And then they get out of the trade and they lose money. And then it goes back again, it goes back up when it's ready to. And then they panic in near the top here, and then they lose money because it's going against them, and they panic out. Like, no, man, the trend is up at this, especially maybe not right here at the bottom, right? You might not know the trend is up, but by this point, you know that the trend is up. I even have this ribbon telling me that the trend is long. So you have this pullback here. You look for the pullbacks, and you look for those pullbacks to neutralize, and you grab those on the way up. And
Well,
the
that
way you
makes
look for them
sense.
to neutralize is the way that we
Yeah.
talked about with Larry. It might be somewhat
Yeah.
algorithmic or, or
Yeah.
not, but structural
Well,
algos, whatever.
yeah. Well, I agree with that strategy because once it breaks the structure, it's a lot safer to catch it on the way when it touches to confirm that it is breaking structure and then ride it compared to kind of just guessing it's going to break structure. I find, I don't know.
Yeah, I mean,
I
look,
guess.
you're going there's always like two ways to handle trading. Like you can rely on actual structure. So if I zoom in on this, right? We'll zoom in. It's gonna be easier to see this with the zoom lens because this is rather choppy waters actually. So the look's gonna be a lot better on the 30-minute. So as price moves up, What did I just do? I moved it to the 5 minute. I want the 30. It's gonna be a lot easier to see that. So this is the beginning of that trend, right? And then it gets a pullback. And by the time you get to here, like you're pretty clear there's an uptrend. You have higher high, higher low, higher high. Really, technically, by here, you're in an uptrend, right? So if you're going to follow that rule, then you're going to want to buy the next pullback and then, try to find a place to sell it. You buy the next pullback, try to find a place to sell it, right? And it could be, all these little pullbacks. It's just, it might be here or there, whatever the case may be. There's a lot of pullbacks to buy. But how do you know? Well, I mean, you see those little green dots right there? See those green dots?
Yeah, I see
The
them.
green dot, that's my algo. Like I built an algo to call those out, right? That's really it's only going to be helpful in a very clear uptrend. So, if you're not in an uptrend, then those tabs are not going to be as effective. So you can't just take every single trade. Like this isn't an uptrend right here. This is a downtrend. Sure, you have the green tab and price does go up at that time. Like you could still take those trades. Not to say they're bad, but when you have a clear downtrend, you know that that's going to be a good trade right here. Like right there. You're going to get a lot out of that trade. Good risk to reward, right? I mean, technically, this one here did happen in a downtrend. Lower high, right? No, actually, that's not true. I can't call that a downtrend. It's not true at all. But these two trades are in an uptrend, right? Not this one here, but now you have your higher high, higher low. So you got your arrow. Bam, go long, right? Bam, go long. This one's a little messy, but it's still an uptrend. Like this is not an uptrend. This is just rancid meat. Like in this whole area right here, this is just a sideways chop. It's not to say that the trades like the algo doesn't call them out, right? But it's just the risk to reward is not quite as good. It's choppy. This is a loser trade. This probably is a loser trade, or it's probably a loser trade. You got, 2 wins, 2 losses. Yeah, it's just not that great. I mean, this is a beautiful win. So yeah, not to say you can't take all these trades and win, but when you're in an uptrend and a clear one, you get the big wins, right? So I have algos that tell me to do that. Like this is a loser trade, even though it's in an uptrend. Right here, that's a loser trade. It's in an uptrend. Price is trending up right there, and it calls it in an uptrend. Yeah, price goes up a little bit, but it's a loser trade, right? Now I do have
Oh,
exits that you don't see on the screen. If I were to actually add my exits in, then you'll see that it told me to get out right here, and I actually would have won that trade. You see this green entry
yeah,
up here? You see that diamond says exit long?
yeah.
I fucking coded exits into my algo,
Oh, cool.
right? So I just don't show everybody like the goods all the time. This is the kind of shit, and this has been a really good algo for me. Like, um, but it's not, there are issues with it. Like these signals will appear and disappear. Now, it doesn't happen that often. And even when they do, they're oftentimes still winners. But I could not give this algo away. People will fuck it up. Doesn't matter if I gave it away. Long story short, though, like when you're in a clear trend, right? Like this is a clear trend down, right? Ignore the algo. What you have here is a clear trend down. You're going to see some green candles. Those green candles are an excellent time to look for price to reverse back downwards and get it then. Don't get it when it's in the middle of a big move. You're going to get screwed. It's what everybody else does. Same thing on the way up. Let's find a good move up here. Even this messy move up, this nasty choppity shit. I wouldn't trade it because it's right before midnight. So I wouldn't trade that. Because midnight's the European Open. So you always want to not trade right at the open. I just moved my algo. There we go. But let's find a cleaner bit. Let's see, this is after midnight. So this is a clear uptrend, right? It's been on an uptrend since, the afternoon. And then you have this red candle. That's a pullback. Then you have a red candle here. That's a pullback. You just look for a good place to buy after these red candles. Look for pullbacks in the trend. Very simple. Larry,
I
you
think
got any
Larry
questions, bud?
bounced. I
What's
think
that?
Larry bounced. I think Larry
Oh, Larry,
bounced.
Larry Brown. Okay.
He had to go,
Um,
yeah.
we got a few minutes, Nick, if you have any other questions.
Well, my quick question is, because I know Majority of the time, when the U.S. is strong, the euro will do the opposite, and then vice versa. I think it's like 80% correlation. I think most of the time they correlate opposite of each other when one's strong, one's weak. Do you find that with gold? Are they kind of opposite the way they move? Like when U.S. is strong, the gold goes down, or they've been moving pretty close or like off?
I haven't paid attention. But there's
Yeah,
one simple way to do it is you get on the gold chart. And
yeah.
what time frame are you talking about? Are you talking about intraday, like, or are you talking about over time?
Over time, I'm just curious whether it's actually correlating or they're moving the opposite direction. Like when the U.S. dollar's strong, is the gold going down and then vice versa, or is it just moving randomly? I'm just be interesting to see how they're moving.
Well, it's really simple. I mean, look,
Yeah,
gold's measured against the dollar.
yeah.
So from a technical standpoint, if gold's going up, the dollar's going down.
Well, that
So
means it takes less U.S. dollars to buy gold, so it means that the U.S. dollar is getting weaker when the gold's getting
stronger.
stronger.
If it
Yeah,
takes
yeah,
less US dollars to buy gold, then gold's getting
yeah.
weaker.
Oh, okay. And then other ways opposite. Okay, makes
If it
sense.
takes more dollars to buy gold, then it's stronger. So the chart, I mean,
Yeah.
look, all charts, when you look at them as just that chart, are they're all inversely proportionate. That's the way the charts work. So when you're talking about if the dollar is getting strong, well, what are you comparing the dollar to at that point? Like if the dollar gets strong compared to the price of homes, if the dollar gets strong compared to the price of bananas, like, so the question that you're asking, is actually one that requires more parameters. Um, if, like a simple way to map it would be to compare the dollar to other currencies, perhaps. So you could
Okay.
like, let me get rid of this ribbon on here, and this will be the last question. It's the time's up here. But if
Yeah.
I were to just overlay the Dixie, which is the comparison of the dollar to the euro and the basket of other currencies, the Dixie's like the dollar versus the Japanese yen and the well, mostly the euro, but also the Japanese yen. I think also like the Swiss franc and a few others, right? So you're
So
talking
all the
about
main ones. Oh, okay.
you're
Yeah.
talking about a dollar strength against other currencies that matter. Well,
Okay.
here you'll notice that it's kind of all over the board, sort of, but on a higher time frame, you'll see the dollar going up while gold's kind of sideways. Dollar starts to go down, gold's going up. Dollar's going down, gold goes sideways. Dollar's going up, gold goes up. Like there doesn't seem to be a
Yeah, it's
relative
like
pattern.
random. Yeah, it's randomized. It seems like okay.
But the when you're comparing strictly gold to the dollar, I mean, it's when you're doing that comparison, by definition, it's going to be inverse. It will always be inverse on the gold versus the dollar chart. Just like when I do USD JPY, the USD
Yeah.
JPY, that's an inverse chart. It's the dollar versus the yen. Now, it might be that both the dollar and the yen are getting stronger in terms of like other things, but the yen's getting stronger faster than the dollar's getting stronger. And therefore, the Japanese yen is getting stronger compared to the dollar, which is effectively getting weaker. So this is a very like mathematical and quite frankly almost philosophical. Well, not really philosophical. It's a mathematical question. It's a very complex question. It's the question that if, I mean really it's the data's all on the charts. So I'm sorry to not be able to just like I kind of answered it really quick for you is that they're always inverse on this chart by nature of that chart being that chart. So if you're like the question to ask would be like, hey, when homes are getting expensive in terms of the dollar, is gold becoming more expensive in terms of the dollar? Right? And then you could
Yeah.
overlay the price of homes on top of this chart and compare the two. Or for example, what's a commodity? Let's just say corn futures, right?
Yeah.
I could add corn futures on here, and you would see that compared to corn futures, it's kind of also all over the place, really. Like, but not, I mean, there's a correlation. Like, the dollar is getting weaker against gold. It's also getting weaker against corn. Gold's getting stronger against the dollar here, but corn is getting weaker against the dollar here in this area. Like, gold's kind of going sideways, really. So like from in this area right here, gold's going sideways. Corn is actually getting weaker against the dollars. The dollar's getting stronger against corn. So you're just comparing the trend. But the trend generally, like in this case, it's kind of interesting. As far back as this chart goes, it's inverse because corn has gotten cheaper compared to the dollar, while gold has gotten more expensive. So again, you also have to kind of consider, oh, what time frame are you looking at? Are you asking about like day to day, or are you asking about over time, right? So, all right, Nick,
Yeah, that's a
I
good point.
appreciate it, man. It's a good question, and if you have a mind for it, it's going to stimulate your mind. And if you don't have a mind for it, or not even a mind for it, like even just if you just know the way it works, you can be like, oh yeah, I can compare these things, and you can think about it and play with it. Um, so is it useful? I mean, look, you can also do like, watch this, XAU USD divided by corn. Actually, I'd say corn in terms of gold. So corn divided by XAU USD and hit enter. And now what you're seeing is corn against gold. See that?
Yeah.
So corn has just done nothing but get cheaper against gold. You can literally manipulate, like TradingView is a very powerful tool. Like you can actually type whatever you want here. Like you could type is platinum in terms of gold, right? And you'll see that platinum's done really well against gold back to April. It's gone up a lot, probably because it has a lot of uses, I'd imagine, in nuclear. But over time, like going back to 2018, it's mostly gone down. It had a pop up in 2020. Now, what you'll notice what happened in 2020 and what's kind of happening now, there's a lot of like instability. You know what I mean? So,
Yeah. Yeah.
you
Thanks for
could
the.
make a thesis of comparing the events in November of 2020, whatever that might be an election, to April of 2025, which I think that was actually the tariffs, maybe. So you could compare those things and say, okay, well, when things get tough, platinum goes up. Like either whether it be the pandemic or tariffs, which effectively the pandemic became like tariffs in the whole scheme of things. So basically, when goods cannot transfer across borders, platinum price goes up in dollars,
Okay.
or in terms of
Yeah.
each other. But yeah, this is in dollars. This is platinum versus the dollar divided by gold versus the dollar. So yeah, okay. Well, anyway, thanks for that, and
Yeah.
we'll catch
Thanks
you
for the
later,
meetup,
brother.
buddy. Yes, you, buddy. Goodbye.
All right, thanks for watching. I do this every other Wednesday for the Brotherhood. I also have algofactory.tech, so come check that out. We teach people how to build their own trading algos so they can extract money out of the market on a regular basis. Whether you have a job or you don't have a job, whether you want to day trade or swing trade or simply invest, Algo Factory is a pretty awesome thing to do. So come check that out. Again, thanks for watching.